This one candle will change your trading forever. If you guys have followed me for any amount of time, you would have learned already about the engulfing bar play. Now, the engulfing bar play has helped me and multiple of my students make thousands of dollars through this method. And in today's video, I'm going to get a lot more in depth and I'm going to break down how this one simple strategy and using one simple candle, how you can identify trade opportunities, get your draw on liquidity, and are able to find trade setups every single week. This one candle will change your trading forever. And again, if you guys already learned about the engulfing bar, you guys are going to learn a little bit more in depth when it comes to this and why it's so effective and why this methodology, in my opinion, is probably one of the best out there. Now, again, just to reiterate the point, we're going to go ahead and just talk about what the engulfing bar is for anyone who's new. So we have the bullish and we have the bearish engulfing. The bullish one is one that takes the prior candle's low and we have a closure above. And the bearish engulfing is one that takes out the prior candle's high and has a move lower and closes below the opening price. So again, here are the definitions. For the bullish one, price sweeps the prior bar low and closes above the prior bar's opening price. So for the bearish engulfing, price sweeps the prior bar high and closes below the prior bar opening price. Now, some schools of thoughts, they actually expect the candle closure to be below the whole bar. For me, I just need to be below the opening price. That's why I consider this one right here a bullish engulfing, even though it doesn't close above that candle, because again, for me, it's only relevant and salient when we're talking about the opening price. So why is it so effective? Simply put, guys, it's because it really reiterates this basic market structure pattern that has been around for so long. So if you guys know about QM ranges or stop blocks or FU candles or whatever smart money term that most people use for this is an encompassing fact that all the bar is representing is this structural play in here. And now the key thing is this. The engulfing bar, it gives us indication on two major components when it comes to this, where there's a run on stops and we have displacement. And that is why it's so effective. Most big moves happen after a run on stops. And again, how do you know that there's a run on stops is when we have displacement, when we have an energetic push away from the key level or from the key liquidity pool. So when we go back here at this illustration, we're seeing how price took out a liquidity pool and then has a push up. So for the time frames, right? I trade on the 4-hour, the daily, and the weekly. Now, I can trade it on the lower time frame as well, but that's going to be a different video for a different time. We're going to just focus on those specific time frames. So when price takes out this prior bar low, if this is a daily candle, this is essentially taking out a prior day low. So if you guys watch any of my liquidity pool videos, I talk about the different data points that we use for liquidity. A prior day low, prior day high, prior weekly low, and prior weekly high are all salient to this discussion. So price again takes out the prior liquidity pool and we have a push up, and this closure right here is my form of displacement on the higher time frame. So we're going to go ahead, we're going to take a look at a few examples and we're going to break this down further. So here is an example here on gold, and I put on the indicator right here. So we're going to focus on this specific bar in price. Now, for those of you that are wondering about this indicator is only going to be available to the people inside the Train and Trade Academy. It's not going to be out for the public. It's going to be only available for those who are in the academy and they will be put as priority access when it comes to this being out. Should be out by the end of August, going into September, but they will be the only ones that are going to be able to purchase this. Now, I'll make a separate video on this. Make sure just to join the public Telegram if you want a little bit more information when it comes to this, because when it's time, I'll just post it in there. Nonetheless, when we talk about the engulfing bar play, a lot of people have asked me, how do you necessarily trade it? And there's multiple ways to do so. So for me, I use it as a way for directional bias, and I use it as a way for an entry model, even a confirmation. So if we get a bar like this one, for example, you guys have seen me talk about it in the prior video where I want to see a move to the 25% to the 50%, and then you could look for potential shorts. Now, on this specific time frame, and this is why a lot of people, they're a little bit hesitant. On the 4-hour, personally, I use a different way relative to the daily and the weekly. But for the 4-hour time frame, I'm using it more of a confirmation with some sort of narrative. So on this gold example, if I go to the weekly time frame, I know that we're above a prior week high. So this is a really, really good example. Now, this example is also one that I took on my one of my funded accounts. So I remember this example very well. So when I go back down to the 4-hour time frame, I know that I'm inside of a premium. And on this specific day here, I also use a weekly profile. So we see that this is on a Wednesday, so pretty much towards the back end of the week going into a Thursday. And what do we know about the back end of the week? If you guys are familiar with TGIF, typically we're going to see some sort of reversal, especially if the start of the week from here, from Monday all the way until Friday, was one push higher. So we have one bearish engulfing bar here. we got that retest. So again, price came into that 50% mark in here. And then we have the second 4-hour bar that formed. So typically when you get two engulfing bars back to back, that's a very strong indication for that directional bias. So when I start to see this bar in here, and then I start to see even this bar, now I'm anticipating for a further downside to the next discount area. When I look to the left, what do I see? I see a bunch of prior lows on the 4-hour time frame that have not been swept. So for me, this is my trend line liquidity, and this is the liquidity pool that I would be targeting on the move lower. So as I play this out, and I know some people are going to be wondering because there's an imbalance here. Again, for me personally, as long as I get the framework that's there, I'm just going to follow what the price is showing me. I'm not going to overthink it. And again, price then sweeps, and we start to sweep the liquidity that's beneath the market. And we have this big drop here. And this is why I prefer using the engulfing bars as a confirmation entry as well, because a lot of people have asked, how do you trade the bar and like where should you put your stop loss? The stop loss should always be above the candle bar high for a bearish one, and on a bullish example, it should always be below the low. Because we don't want this. If this is the run on stops, we always want to place our stop loss after the liquidity pool raid has happened. So when I see something like this, I want to put my stop loss above. Same thing here. When we had this bearish engulfing bar, it took out the prior high, very minor, push lower, and then price retested inside this imbalance point. I want to make sure that the candle's high does not get violated. So that's typically where I'll put my stop. So let's go ahead. I'm going to show you guys another example here on NQ. All right, guys. So this one here is actually on the S&P 500, and this is on the weekly time frame. Now, if you guys follow me on socials, I talked about this one in depth, but again, I'm going to make a video specifically here for YouTube. So what we have that weekly. We have this now on a weekly time frame, and this is why I want people to go ahead and really study this, because when you see it in your charts, it's very salient. And the thing is this: not only is it easy to see, but it's extremely effective. And if you don't believe me, go ahead, backtest it, journal it, and you guys will see for yourself. So on the weekly time frame, we have again the bar forming, and then we have that liquidity pool, which is that prior weekly low. So now I'm going to go down to a time frame lower, and on the daily time frame, what do we have here? Price has this significant impulse push up, liquidity pool sweep, and then we drop lower. And this is where I was talking to you guys about the market mechanics, right? Where again, all the engulfing bar is showing us is this fractal in here, whereas the market has a liquidity pool sweep and we have displacement further. And what we want to see is a retracement, pretty much some sort of OTE into some sort of premium, and then have that move lower. That's why it's so important that we understand why this works so well, because the bar is showing us the run on stops and the displacement element. Now we have an imbalance here. Price has a push up into the new week, and look how we have a nice test in there. And I'll remove this. And as we have that nice retest on this fair value gap, what do we have here? We also have a breaker. So now we have that unicorn model, which we have the breaker point aligned with the imbalance. And look how the price sells off. We clear this liquidity pool. We took out that prior bar, the candle's low, but we also have an imbalance to fill here because of that gap where all the liquidity is also resting. So when you have a potential low that you're targeting, it's always better that this low is forming above a specific PD array or a reference point, because this allows us to have multiple confluences to the trade and the direction of the market. So if you guys want to backtest this one as well, this was actually July 22nd, and you guys can look and study on that pair as well. So this was actually on ES. Now, if you guys are new to this channel, make sure to subscribe and make sure to join the public Telegram. The public Telegram is where I make additional videos. I'll make any snippet types of videos. I'll also put my weekly commentaries, and just a better forum for me to kind of like engage with everyone and provide a lot more content, a lot more value. So if you enjoyed this video, make sure to share, and I'll see you guys in the next video.